before Rejoice.
Okay, sir. Good afternoon. Sorry, I didn't know. I didn't unmute myself. Good afternoon, sir. And good afternoon, everyone. I think
Afternoon.
the part one of the limit factor I was not in the class, but I joined the last one where we treated the limiting factor with shadow price, which is the I think the way I understand it better is special
Shadow
order.
price. Shadow
Uh,
price or minimum guarantee.
Minimum guarantee. Sorry, limiting factor with minimum guarantee, which the way I understand it better is a special order. As in when we have a question like that, we need to first of all settle those customers that are essentials before now settle others. So in that case, we need to determine what is the limiting factor in the question. Having done that, then we need to determine the limiting determination of the limiting. After we have determined our what is the limiting factor, we need to determine the contribution by limiting factor, just like the way we did the way they explained in the last class. After that, we do our ranking allocation. So after we might have settled the special order first, then we now go ahead and use the remaining one to allocate for the regular customers. I think
Okay.
that's what I can
Okay,
say for
that's
now.
fine. That's fine. Thank you. Thank you. Rejoice.
Okay, good afternoon, everyone. Good afternoon, sir. In
Good
our
afternoon.
last class, we talked on limiting factor and we entered the limiting factor with minimum guarantee, which is special order, where we have to settle our, can call them your VIP customers, those special customers first before you have to talk about the orders that you need to settle. And we use the same process we use in solving our last question. But in this case, our limiting factor was material, not ours. And we follow the process by first of all determining the limiting factor by comparing your available to your required. And when we did that, we noticed that it was material B that was having the limiting factor in terms of material scarcity. And from there, we went further. The other one is to do the contribution, but in this question, they already gave us the contribution. So we went ahead to do the limiting factor, the contribution per the limiting factor. And after that, we did the ranking and we allocated. And the main focus of that last class was the minimum guarantee, where you taught us how to solve for minimum guarantee, which is for the special orders. They have to allocate it first, and you showed us how to do it by taking the total materials we need. After removing it from the available, we'll now allocate the remaining one. We could only allocate for hem after taking that 50 units that we needed for these our special customers. We could now take for orders for only M. So at the end of the day, the 15 units came out for the rest of them, and M was able to get up to like I think 206 units because it was able to cover for the specific, which is the minimum guarantee our VIP customers, and also for to an extent other customers. And
Wow.
I think
Wow.
that was what we did.
Okay. Wow. That makes sense. Thank you so much. That is just all what we discussed in our previous class. Thank you so much for the summary. And thank you, Mr. Moses, for that summary as well. Right. And it is what it is. Right. It is what it is. Both of them, they spoke well. And you just need to go back. Limiting factor process does not change. Right. Limiting factor process does not change. It always remains the same. The process is still the process. All you need to do is that understand the requirements, right? Understand the requirements. So in today's class, we'll look at limiting factor with shadow price, one of the I can pass question. I think, yes, if at all question want to come under limiting factor, or under decision making. Decision making, we have the CVP. Question one will not come from CVP. You should not even think about it, right? But it is one of the questions we expect in 20 marks question or 10 marks question. That is why I gave assignment. That assignment is very important, and some of you actually attempt and some did not attempt. Okay, that's fine. Rejoice, please, can you restructure that the C part of that question, then you send it in full to the platform, please.
Oh, okay, sir.
Thank you. Then you check Ayola suggested solution for the last, I think question 6 for the last question. So he's very correct. He or she is very correct in that analysis, right? It is what it is. Other can actually check Ayola question 6 and check Rejoice when she restructured the question 4, I think question 4 thereabout, right? So it is what it is. You just have to understand the process and know how it will. PM is not difficult. It is not something that is difficult. Just understand the principle behind it, right? You should have a principle book. Now, you should have a principle book, right? I can show you this, that I have a principle book, right? I have a principle book. So I have them. I have SFM. I have everything. This is it. So any topic I want to take, I will just go to the principle book and check. Okay, it is limiting factor with shadow price. I will just check it. Okay, what is shadow price? Okay, is this? What are the process? I'm just concerned about the process. So any question you want to, any question at all, that process will still remain the same. It doesn't change, right? So understand the principle is very important. Now, in today's class, now who can explain shadow price? What is shadow price, right? And before we go there, before we quickly talk about the shadow price, so required of this question. Okay, please can someone read required?
Required. As the management accountant, explain briefly the concept of linear programming and usefulness of the model. B.
Thank you.
Okay.
Thank you. Thank you. So the concept of linear programming, that will be our next, that should be our next topic. But I want us to treat throughput accounting before linear programming, right? You know, don't forget, when you have more than one limiting factor, it is linear programming. Then we'll talk more of, we'll explain linear programming in full, in details when we get to linear programming, right? Thank you. You can move on. B.
B. Compute the prices that will be adopted by the company for the two products using the company pricing policy.
Now,
C.
Thank you. Compute the prices. Something should just come to your mind. Prices that will be adopted by the company for the two products using they are telling you that they want to know the price of each of the two products. And what is the price? Is the selling price. Is the what? Is the selling price. Compute the price that will be adopted by the company for the what? For the two products. The price, meaning that you cannot use cost for price now. If it is cost, they will say cost. If it is price means the selling price, the pricing policy. Using the company pricing policy. The question is, we don't know the company pricing policy, right? But we just need to understand the requirement. This is 5 marks. Next.
C. Advise the company on the output that needs to be produced to maximize its total profit, supporting your answer with full financial analysis.
Thank you. The output, you can see. Thank you so much. You can see on the outputs. This is output. Don't forget, it may be optimal production mix, output. Any English at all they want to use, it is still your production plan. Advise the company on the outputs that need to be produced to maximize its total profit. Right? Supporting your answer with full financial analysis, right? How you arrive at your outputs as well as your what? Your profits. D.
D. Explain the meaning of shadow prices and comment on
The
comment on the
usefulness.
usefulness of it and its limitation.
Class, can someone tell me, can someone explain in a simple language that someone, even a market woman, can understand shadow prices? What is another name for shadow price? What is another name for shadow price? Class, what is another name for shadow price?
Dual price.
Dual price. Good, correct.
Dual
Dual what?
Yeah.
Dual price. And what is shadow price? What is shadow price? Class, what is shadow price? Okay. The next one is Roman figure 2. Calculate the shadow prices of the constraints. Of the constraints. The shadow price of the what? Of the constraint. Class, what is shadow price? What is shadow price?
The shadow price is an amount by which the objective function increases by by the increase of 1 unit of the limiting factor.
Okay. Any other one? Any other person that want to try? No, not try self. I already explained it now. So. Okay. Zara.
Okay, sir. I think shadow price is like a hidden value of maybe resource that is not directly linked to the market price of that product or that resources. I don't know if you understand.
Interesting. Okay. Any other person? Shadow price. One thing about performance.
Shadow price. It is an
Right.
additional increase. Can I go on?
Please go on.
It is an additional increase in scarce resources that will result in increase of a limiting factor that is additional of 1.
Okay. That's fine. Now, one thing about performance management is that your ability to understand what you want to do. In fact, even if you did not even get the correct answer, but you shall, because you understand the meaning, but you don't know how you will actually arrive at that. But your understanding of that requirement alone, it is assumed that you've even solved the question. No, I asked the question that what is shadow price?
Okay.
Okay, go ahead.
I think it's an increase in contribution as a result of increase in additional resources.
Okay, that's fine. That's fine. Now, what is, please, you can mute your mic. Now, the question now is, what is shadow price? Okay, Rejoice.
Okay, so shadow price is that additional contribution or profit a company will have if they are able to make additional 1 unit of a scarce resources available. Like what they will get if they are able to make that scarce resources available for that production.
Thank you. Thank you. Makes sense. So it is what it. We just need to understand like what we want to do. What is shadow price? If you have two phones, then you increase it by one. You add one to it, making three. That one that you had to it, it will definitely increase something. What it will increase is your contribution. An additional increase in a scarce resources, in a limiting factor. Maybe it could be labor, it could be material, or other processing. When you increase that limiting factor, the one of limiting factor by 1 unit, what will be the resulting contribution? Your contribution will increase by that unit. Then when you now say the shadow price, it is that increase, the additional increase in the marginal contribution or in contribution is what we call shadow price. Now, that is shadow price. The last question here, assume the company position is maintained for the 3 years with an investment cost of 450 on the day of the commencement of manufacturing of business, using the cost of capital to discount 15%. Can this venture be justified for the period? Okay. What is the break-even discount factor for this project? You can see this question actually tests your knowledge in addition to the capital investment. Can this venture be justified for the period? Now, 40 marks. Our focus here is just two things. Our focus here is just two things. Compute the prices and shadow price. You see the output, we already know how to determine output. We already know how to determine profit, but we'll still do it. But our focus here is this B and the shadow price. Now, this is the question. Please, can someone read? Okay, okay, please read.
Can I read, sir?
Okay, Moses.
Yes, sir.
Okay, yeah, now, a quick one.
Okay. Thank you. Attended a seminar titled Optimizing Scarce Resources Utility in a Manufacturing Setting with a particular reference to linear programming. On his return, after 3 days of the program, he called for a management meeting to discuss his experiences at the seminar in view of the board decision to produce 2 major products in the coming years. The following information are made from the work of a research team earlier conducted by a group of external research experts. We have the expected product scarce, biggie and smallie, the expected cost. Yes.
Thank
So
you.
we have all the information assumed to be correct.
Thank you. No, hold on. Just hold on. Let me analyze this part.
Okay.
Right? They attended the seminar and they decide that, okay, we have 2 major products in the coming years. And these two major products are biggies and smallies. Right? Now, I want to ask a question. Now, this 5 kg is what? 5 kg per what? This is 5 kg. 5 kg per what is this? Class. Are we still together? 5 kg
5
per
kg
what?
per unit.
Thank
It's
you.
5 kg per unit.
Thank
Per
you.
unit produced.
This is 5 kg. This is 5 kg. It is per 1. You cannot have total kg to be 5. This is 5 kg per unit. And this is, we will not pay them 50 naira per kg, meaning that if they use 1 kg, we'll pay them 50 naira. If they use 2 kg, we'll pay them 100 naira. If they use 3 kg, we'll pay them 150. The same thing applicable to this. If they produce 1 unit, they will use 5 kg. If they produce 2 units, they will use 10 kg, and so on. And this is the costs, the material costs. 5 kg times this, we have 250 naira per unit. This is 250 naira per unit. This is the material cost of that. And this is the material cost for smallies. Then labor costs. Under the labor cost, we have machine. What of these 4 hours? 4 hours is what? 4 hours per what? 4 hours per what? Class? 4 hours per unit. Meaning that they will use 4 hours to produce 1 unit. Then we will not pay them 15 naira per hour. When you multiply this, you have the labor cost to be this. You have the other processing cost to be this. Now, the company expects to maintain a pricing. Now, this is the pricing they're talking about in the requirement. This is the pricing. The company expects to maintain a pricing policy that is aimed on total cost of production plus 20% markup on cost. That is the pricing policy. We should not forget our markup and our margin. When you want to produce a product, you will incur a total cost, a total production cost. And what are these total production costs? Your direct labor, your direct material, your variable production, and your overhead cost. We give you the total cost of producing that product, because that is it. Practically, let's put it, if you want to produce a product now, what will be the total cost of production? The total cost of production will include both your direct and indirect cost. And the question says on the total cost of production plus, meaning that when you want to determine the selling price, it will be on the total cost of production. You can see that in this question, the selling price is not given to us, but there is a company policy that states that when you want to determine the pricing, it will be on the total cost of production plus the 20% markup on cost. Meaning that we should not forget the pricing. When you have selling price, we have cost price. We have selling price, we have cost price, we have profits. You can agree with me that your cost price is not so class, right? It is good. You can all agree with me that your sales minus your cost price will give you your profit. Is that not so, class? Is that not so?
Yes, sir.
Your selling price minus your profit will give, minus your cost price we give you your profit. So when you want to determine a markup on the total cost, markup is on costs. So meaning that you just have to charge 20% of the total cost of production. We give you your profits. So your profits plus the total cost of production, we give you your selling price. Your total cost of production, markup is on costs. You can do it directly and say 20% of the total cost of production. We give you profits. Profits plus the total cost, we give you the selling price, and that is the pricing. And what make up the total cost of production? The direct material and the indirect, the fixed overhead. We'll get there. Now, the company further expects to incur annual period overhead of 10 million with normal production expectation. This is their expectation, that is their budgeted. They are expecting this. They are expecting this for smallies. Absorbing the overhead on the basis on 3 to 2 basis, respectively. Plus, their total overhead is 10 million, and we need to determine the fixed overhead. What is the fixed overhead that you incur in biggies? Which one did you incur in smallies? Because there are 2 products, and it will now be absorbed. Your fixed overhead will be absorbed based on 3:2, 3 to 2, meaning that 3 plus 2 is 5. Biggies, we take 3/5 of the fixed overhead. Smallies, we take 2/5 of the what? Of the fixed overhead. That is the basis of apportionment. 3 to 2. 3 plus 2 is 5. 3 for biggies, 3/5 for biggies, 3/5 times the 10 million for biggies, 2/5. This is what times the 10 million of times the 10 million will give us the one of smallies. Then it is expected that the forthcoming year, the company will have the following resources available. Can you see? We're given all the information about the available scarce resource or available resources. This is what they have. They must not do beyond their power. They must not go beyond or above their budget. And this is what they have as what? As available. So we will be working towards this available what? Available resources. Now, in biggies, they are expecting to produce 200 units. In smallies, is 100,000 units. Plus, we need to test for limiting factor. Which one of these is the limiting factor? Is it material? Is it machine time? Or other processing? You should not equally forget that if for material, okay, suggested solution, when we get to linear programming, we'll explain more about linear programming, the usefulness and the limitation, right? B, suggested solution. Please, I want every one of you, please, to pay attention to this particular question, right? It is very important. Suggested solution We'll start with B. Right. Pricing. Now, we have two products, the biggies and smallies. Okay. I hope you are writing. Biggies and smallies. Class. For you to determine the price, the pricing, you need to know that is the selling price. You need to know the total production cost. Because when you know the total production cost, before you now apply the 20% on the markup, that is, markup is on cost. In another case scenario, you may see margin. Then we will now do a conversion when we are done with this first. What is the total cost of production? We include your material cost, your labor cost, and the fixed overhead. And the fixed overhead here is 10 million. And they've given us the basis of apportionment and absorption. 3 to 5, 3 to 2 basis, meaning that 3 over 5 of 10 million for biggies, 2 over 5 of smallies of 10 million will give us for the one of smallies. That is the fixed overhead. So we can do material costs. We can start with material costs. Material costs. Material. So what is the material cost given to us in the question for biggies? What is the material cost, class? Away. Am I the only one in this class?
5 naira.
250.
Someone say 5 naira. Away.
250.
250, thank you. This is cost. This is cost. This is cost. Is that not so? This is cost. This is 250 naira per unit. This is 60 naira. This is 60 naira per unit. This is 40 naira per unit. You've multiplied this times this. That is what gives us this. This is the cost. So material costs 250. What do we have here?
150.
150. We have the labor costs. The first labor cost, we have, what is the first labor cost? The name? What is the
Time.
Thank you, machine time. What do we have here? What is the cost?
60.
60.
60. What do we have here?
30.
30. Okay. So your presentation should be determination of selling price per unit. Order processing. What do we have here for the order processing?
40.
40.
40. What do we have here?
The other one is 50.
We have 50. Then the next one is fixed overhead. Now, don't forget that All this thing is per unit. Is that not so? All this thing is per unit. This is per unit. This is per unit. This is per unit. Now the fixed overhead should also be per unit. And they've given us the basis of determination of fixed overhead. Overhead per unit. They've given us the basis that the fixed overhead is 10 million overhead, and it will be absorbed on the basis of 3 to 2. That is 3 plus 2 is 5, 3 for biggies, and 2 for smallies. So we can have here biggies equals to, or 3 plus 2 equals to 5. This is 3 over 2 times 10 million. The next one is smallies. 2 over 5, sorry. 5 times 10 million. What is the cost? What do we have? What is
6 million, 4 million.
6 million, and the other one 4 million.
6 million is the fixed overhead for biggies in value, and this is 4 million. Class. But what we need is the fixed overhead per unit, fixed cost per unit, because all these are in units. Can you see? 250 naira per unit, 60 naira per unit. But what we have here is the total costs that will be allocated to biggies, which is 6 million. We cannot put 6 million here. We have to get the fixed overhead cost per unit. Class. So if you want to get the unit, we divide by what?
The
By the
200,000.
produced.
Thank you. For the unit, for the expected units of each of the what? Of each of the products, where you have 200 units and you have 100 units expected or budgeted, as the case may be in the question, right? 200 units, 100 units. What is the cost per unit?
30,000
That's 30.
and 40,000.
No.
30 naira or 30 naira.
30 naira per
30
unit.
naira. Thank you.
Per unit.
30 naira per unit. Thank you. 30 naira per unit. That is the cost. What of this? What do you have here?
14 naira per unit.
40 naira per unit.
40 naira per unit. So you now come here and say fixed overhead. You have the 30 and the 40 per unit. They are all in unit, because I've said determination of selling price per unit. All these costs are all in units. Class. This is direct costs. This is indirect costs. Additional of all these costs will give you total cost of production per unit, right? That is the total cost of production, is the combination of the direct material and indirect cost, direct cost and indirect costs. Now, this is another case of limiting factor. Usually they will give us selling price. We just remove our selling price minus our variable cost. We have our contribution. We just move like that. But in this question, you have to determine the selling price. And They told us in the question that the pricing is on the total cost of production plus the markup on cost. So therefore, what is the total production cost per unit? Costs, total production cost per unit. What do we have here?
380.
380. What do we have here?
270.
270. Thank you. Now, they've given us a markup. Markup is usually on costs to be 20%. When you want to determine your profit, it is 20% of the cost because it is markup. Now, let me quickly take you back to the days of selling. SP equals to the cost price plus the profits, right? This is your costs price. This is your cost. When you had profits, which is markup of 20%, 20% of the cost. 20% of this, what do we have? 20% of 380. 72.
76.
76. What do we have here?
54.
54.
54. That is your profit. So your cost price plus your profit, we give you what we call selling price. What do we have? Addition of the two.
130.
130 is our selling price.
56.
What do we
So
have
it's
here?
not addition.
Is addition.
Sorry, sir.
456.
456.
What do we have here?
324.
324. You want to determine the selling price. Selling price is cost price, your cost, plus your profits. This is your cost. This is your profits. We give you the selling price. Right? When you want to determine the cost price it will be equals to the selling price, the SP minus P, which is the profit. Right? When you want to determine the profits, will be equals to your SP minus the cost price. Now, in another case scenario, let's assume this markup, it is not markup. Markup is always on cost to get your margin. Now, let's now assume that it is margin. Margin of 20%. Margin is not always on cost. Margin is on sales. Margin is usually profits divided by the selling price. The selling price will give us the margin. Margin is not on cost. When they give you the margin of 20%, you cannot apply it to the cost, because margin, you can only apply margin on sales to get your profits. Now, in this case now, you have to convert this your margin to markup. You have to convert this to what? To markup. Plus, you can agree with me that markup is on cost. Let's say the markup is your cost price or your profits divided by the cost price. Your profits divided by the cost price, we give what? We give markup. Sorry, costs. Cost price, profits. Now, this is markup. You need to convert this your margin. You need to convert this margin. Yeah. You need to convert this margin to markup for you to be able to say you want to use it on the total cost. Then, when you want to convert this now, don't forget that this is selling price. This is profits. Class. This is selling price and this is profits. And you are given a margin of 20%. Margin of 20% means that profits is equals to 20. Selling price is equal to 100. That is what it means. Margin is profit over selling price. It is profit will be 20 and selling price it will be what? 100. So because you cannot use it direct, you need to convert it to markup, which is markup is on cost direct. And don't forget my equation here. And don't forget this cost price. So in this case now, when you want to convert to margin, you cannot have your cost price will be equals to selling price minus the what? Minus the profits. Selling price minus what? Minus profits. So you cannot have the cost price, which is the conversion, which is the markup, 100% minus 20%, you have 80%. So you cannot apply it on the what? On the cost. You cannot apply margin directly on the what? On the cost, because margin is on sales. Then you need to convert. Now, this 20% means that 20 is for profit, 100 is for selling price. And why is it 100? This plus this will give us 100% here. So if you want to determine the cost price, because you have to convert it to markup, to cost, and it is selling price. Cost price equals to the profit. Selling price minus what? Minus the profit. Where we have this selling price minus this profit, we have this. Class, any question? Are we good? Class, are we good? Our
Okay, sir. Good afternoon, sir.
good afternoon.
Sir, this formula, like this formula that you give us on, is it on margin? Is it constant? This
It's constant.
100%?
It's constant. Selling price is always 100%.
Okay.
Selling price is always 100%. Now look at it. Let's practically this is 100%, right? This is 100%. This is your profit. To get your cost here will be, who is that? Will be 100% minus 20%. We give you a what? we give you, I'm myself, 80%, Abi, 80%, right? You can see this is your cost here is 80%, your profit is 20%, 80 plus 20 is 100. So 100 selling price is always 100%. Thank you. So we can move, right? So we are good, right? Okay.
Yes,
Now,
sir.
okay, that's fine. Now, okay, this is 5 marks. Now, on the advise the company on the output now that needs to be produced to maximize its total profits. Supporting your answer with full financial analysis. Outputs. For you to determine the output, you have to determine contribution. You have to start from, you have to identify which of the resources given to us is the what? Is the limiting factor. Is the what? Is the limiting factor. Right? So let's quickly test for the one of limiting factor. Right? The one of limiting factor. We have, okay, this is C, right? C. We have biggies, smallies. You should not forget our focus. Our focus is for you to understand that ICANN can give you anything on limiting factor, right? And you can see the way we arrive at our selling price. And even the fixed overhead per unit, cost per unit is not given, but they gave us the basis of the absorption. So whichever way they give you in the question, you should be able to absorb the overhead based on the information given to you. Excuse me.
Sorry, Rejoice, are you there?
Yes.
Okay, please, you forgot to send me her yesterday. Please, I'm waiting.
I dropped a message on this our platform that I can't find your number on WhatsApp. Is if it's Sally who you are using to as your WhatsApp name there.
The thing is that, in my class, okay, the thing is that Awaya, she's in, I think she's in PM2. With Joyce, you are in PM1 now, so you can see her. So that's it.
Oh,
Awa,
okay. Sorry,
yeah,
sir. Thank you.
no, that's fine, that's fine. So you can, I don't
Sorry,
know.
I was lost. So I can't hear. I was thinking maybe it's our lecturer that was muted because I was even asking the class. I didn't hear anything. Now that I just got back.
I I was muted before, right? So we've not started anything now. We are still in C. Now we want to determine which one of the resources given to us, available resources given to us, is the limiting factor. Right? So let's start material. Material. We start with material. Material. Now, so how many material are we going to use for biggies? How many material are we going to use for biggies?
200 units.
You use 200 material for
Yes, sir.
biggies. You use 200 material for biggies.
Yes, sir. 100 for smallies.
That is material. Iwe. Chimo.
Sorry, 250.
Now, you can see that this is the unit, and this is the unit for this class. You will use 5 kg for 1 unit. How many kg are you going to use to produce the expected 200 units? How many kg? That is 5 kg times what? Times the 200, right?
Yes.
That's 1,000. Sorry.
1 million.
1 million.
5 kg per unit times the expected units. You use 5 kg. This is all what you'll be doing in limiting factor. This is 5 kg per unit to produce 1 unit of expected. Now, you want to produce 200 units of expected. What do you have? What is the total?
1 million.
1 million.
Away. Okay. 1 million naira, Abi.
1 million
1 million
kg.
1 million units.
1 million
1 million
units.
units. Sorry.
unit care.
1 million kg.
1 million
Okay.
kg. 1
Kg.
million kg.
Okay. So the next one, we want to know the required. So when we know the required, when we know the kg that will take you to produce the 200 units, we will now compare it with available. Then we'll check, is it a limiting factor or not? Is there anything, is there a shortfall or not? Right? The second one is 3 kg per unit.
And 100,000 units.
You will use 3 kg to produce just 1 unit. 3 kg per unit times 100,000 units. So what do we have here?
300,000
kg.
300 kg.
300,000 kg.
So the total required, when you add the two together, we give you the required to produce 300. So that is 1.3
kg.
kg. Then you now compare it with available. Please always check from the question, how many units? If it is hours, how many hours will it take them to produce that thing? So that you will calculate, you will get the required. When you get the required to produce that particular unit, you will now compare with available. What is available? 1,000 watts. What is available? Resources. What is available with resources? Are you know with the material? Away.
1,800.
1,800. Okay, I think someone wants to ask question. Who is that? Please, you can unmute your mic quickly. I think someone wants to ask question. I didn't see it. Okay. 1,800, 1.8. So you can compare. You have 1.8, 1,800,000 kg to produce biggies to produce 200 units of biggies and 100 units of biggies. But what it will take you to produce it, it will take you you will use 1,300,000 kg. So is there a limiting factor here? What is the difference?
No, 500. We have enough material.
500,000 kg.
So,
No limiting
500,000
factor.
kg. Right? It is not a limiting factor because you still have enough resources to produce that particular product. So addition of this, so that is what gave us this. Now, we move to the next material, the next available. You can see that in this question, they didn't give us material A, material B, or grade 1, grade 2. They gave us the available for material, labor. Sometimes they may give you the one of that grade 1, grade 2, or material A, material B. You need to check which of the material is limiting factor or not. Right? Machine time. Machine time. How many hours will it take them to produce 1 unit for biggies? How many hours will it take them to produce 1 unit of biggies, class?
4 hours.
4 hours.
4 hours. So we have 4 hours per unit times 200 units, meaning that they will use 4 hours to produce 1 unit, and they want to produce 200 units. So when you multiply this, what do you have?
800,000.
800 hours. 800,000 hours.
800,000 hours. So we can check for this as well. So how many hours will it take them to produce 1 unit?
2 hours.
2 hours.
2 hours per unit. You can see 2 hours per unit goes with unit. 2 hours per unit goes with unit. 2 hours per unit goes with what? Unit. 100. We have here 200 hours. So what will be the required? When you add this together, what do you have?
1 million hours. 1 million hours.
Okay. Available. What is available hours for machine time?
800. 800,000 hours.
Hours. Do we have a limiting factor here?
Yes.
Yes, sir. 200 hours. Short form.
200.
Thank you.
Short form.
Because what we already have is 800, and it will require 1 million hours. We don't have that capacity. Machine time is the limiting factor. And that is what we will be working on. Limited. We need to know, meaning that we don't have enough capacity to produce that 200 units and 100 units of biggies and smallies. We need to ration it. We need to allocate based on what we have. So the difference is 200 short for under the theory of linear programming, it is called slack. We will get there. Now, the next thing is other processing. Don't forget that even in linear programming, there is shadow price. We'll get there. So we have other processing. So how many hours will it take them? I think it is in hours now. How many hours will it take them to produce 1 unit?
4 hours.
Thank you. 4 hours. We need to complete this as well. 400 units. We have 800 hours. When you have more than one limiting factor, you use what? Linear programming, right? When you have more than one limiting factor, you use linear programming. We'll get there, whereby they have a constraint to be 3, and we have to formulate the linear programming, what is it called? The formula, right? Formulate it. We'll get there. So what do we have here? How many hours will it take them to use for this?
5 hours.
5 hours.
5 hours per unit times so we have 500 hours. So required is what? 1 point what?
1.3 hours.
1.3. So they have enough available hours here. What do we have? What is available hours?
1.4.
1.4. There is no shortfall. They have enough. So what is the difference?
100,000.
100,000 hours.
100,000 hours. Makes sense, right? 100,000 hours. 100,000 hours. Right now, meaning that the laborers, the workers, they can work overtime. In some question, under the theory of limiting factor, the question may still go further. Maybe the C or the E part of the question, that you see the excess hours that we have, this 100 hours, that is excess. It is assumed that the labor will work overtime. And that is where overtime will now come in. Overtime. That is, it will now be stated that, oh, the labor need to work overtime. Any excess hours. I think the question 3, illustration 3 is your assignment. There are illustration 3, illustration 4 are past questions. So you can check the suggested solution there, right? But anyway you feel you don't understand, you can just drop it to the platform, then I will look at it. Illustration 3, illustration 4, right? Now, the question may go further and say, oh, this 100 excess hours should be what? Should be used for overtime. Let's assume the labor want to work overtime. This 100 hours should be used for the overtime. And you have to pay labor. You have to pay them. There will be a cost for the overtime. Is that not so? There will be a cost of the what? Overtime. So should, in case you see a question like that, any excess hours should be used as overtime. Now, if this is the limiting factor, we can go further and calculate the contribution per limiting factor, determination of contribution per limiting factor. Smallest. Is it smallest or biggest? Biggest. Please, this naira sign is very, very important. Please. So, the selling price, What is our selling price? We've calculated the selling price, right? Selling price. What is our selling price? Biggies? Are we there? Selling price.
Selling price for biggies is 456.
456. Thank you.
Yeah.
456. Smallies.
And smallies is 234.
324.
Two, oh, is it 324?
324.
324.
324.
Oh,
Okay.
sorry.
Okay, that's fine. 324. We have less all the variable costs. Right. We have the material costs. I can copy all those costs now. Let me just copy them. The variable costs to give us contribution. Don't forget that selling price per unit and variable cost per unit will give us contribution per unit. Right. Contribution per unit. So what is our contribution per unit when you subtract your selling price from all your costs? Excuse me.
106 for biggies.
Contribution per unit 106. What do we have here? What do we have?
94.
94. Okay. 94. Now we need to determine the contribution. This is contribution. We say contribution per limiting factor. Limiting factor. This is contribution per unit. It's meaning the limiting factor. So what is the limiting factor? Machine time. You can put it here, machine time. Right. What is the hours per unit? Machine time. Hours per unit. What is the hours per unit for machine time?
4 hours.
4 hours per unit for biggies. What of smallies?
2 hours.
2 hours per unit. Right. This is this. Now, you cannot say this is your A divided by B, right? A divided by B, contribution per unit divided by the limiting factor, which is the machine time hours per unit. You can have your contribution per limiting factor. Limiting factor. I think I have to do something. Contribution per limiting factor. So when you divide 106 and 4, what do you have?
26.5.
So it's just 26.5. Okay. Oh. What do we have? So I will just write 26.5.
26.5 per limiting factor
5 naira per unit.
per hour.
26.5 naira per hours. Thank you. Yeah, per hours.
So it's 26.5 26.5 hours per unit.
I think this is the third question that we'll solve on limiting factor. Leslie, mute your mic.
Hello, sir. Sorry, I don't know what is wrong with my network. I don't know where we are. Are we just sorry, sir?
I don't know. I don't. That one is your network, Mr. Moses. You can
I don't know.
always check. You can always check back, please.
All
Thank
right.
you. Rejoice. What do we have here?
We have 26.5 naira per hours.
26.5 naira per hour. What do we have here?
We have 47 naira per hour.
47 naira per hour. Okay, thank you. So, if this is our limiting factor, the next is for us to rank. We'll rank this one first, smallest. Will come first. Then this will be second. Next is to do our allocation. Next is to do allocation. Right. Allocation. Based on the limiting factor. Right. So what is our available hours for the limiting factor, which is machine time? Available, because that is the limiting factor. Available hours. Available hours is 800,000 hours. Available hours is 800 hours. So here will be your unit. This is what we want to allocate. This is the scarce resources because they don't have the capacity to produce the 200 and 800 units. But we have to do allocation. Now, we are allocating for biggies. Is it biggies? Smallies first, because smallies, yes. Allocation. So, smallies. We have to allocate the hours to produce smallies first before biggies. So, how many hours will smallies use to produce 100,000 units? How many hours are they going to use to produce 100,000 units?
2 hours.
How many hours? 200,000 hours. So we have to allocate 200,000 hours first. 200,000 hours first to produce, it will produce 100,000 units. So the balance will not be allocated to, so the balance will be what? 600,000 available for biggies. Now, 600,000 hours available for biggies. Now, how many hours will it take biggies to produce the 200 units? It will take 800 hours, but we don't have that capacity. Meaning that as we don't have that capacity, you cannot produce this 200,000 units because we don't have that capacity. What we have that is available is just 600. So we need to allocate this just 600 for biggies because that is where we are having constraints. It is in biggies because we've moved everything for smallies to produce 100 units. Now, biggies now cannot produce, we don't have enough capacity, right? We don't have enough capacity for biggies to produce 200 units, right? You can see there is a scarce resources there for biggies. So we can't produce the whole 200,000 units. Then allocation to biggies, we'll just allocate the one that we have, which is 600. Then we'll now check how many units are we going to use 600 to produce.
150,000.
150,000 units.
150,000 units.
So 600 divided by what? What is the hours per unit?
4
hours.
hours
4
per
hours.
unit.
4 hours. Oh, okay. Let's see. I need to do something here. Okay. Divided by 4 hours. 4 hours per unit. Oh, I put in error. Sorry.
Yes, sir.
4 hours per unit. Right. 4 hours per unit. So hours cancel hours. We have hours cancel these hours. We have units. So what do we have? When you divide it, what do you have?
150,000 units.
150,000 units.
So that is only the capacity that we have to produce. We cannot produce the whole 200,000 units because of biggies. That is where the constraint is. We can't produce everything. All right? We can't produce everything. We can only produce 150,000 units. So therefore, our production outputs for biggies is 150,000 units. Why for smallies is 100,000 units. Units, right? And that is our production output. So we'll prepare our profit statement based on the production based on the production outputs, right? Profit statements. In another case scenario, they can call it production plan, production mix, optimum production plan, optimum this, anyhow. It is still your allocation the usual way you need to allocate, then the available, then we move from there, right? So now the profit statement, profits statement for biggies. And don't forget, in this part here, we don't have enough resources to produce all 200 units of biggies, right? And that is where we will now place our shadow price. We'll get there, right? Now, biggies, smallies. Okay. Right, so we can pick it from our contribution. Our contribution. What is our contribution for, please, not contribution per limiting factor. What will be our contribution that we calculate? What is our contribution? What is our contribution here, class? What is our contribution?
106 and 94.
Okay.
106 and 94.
Thank you. 106 is per unit. Per unit. Let me write per unit. Times how many units of biggies do you want to produce?
150
Based on
unit.
Thank you. Based on the production plan. 150 units. 150 units. So what is the total contribution?
15,900.
50,000.
15, 900. 15,900. 15,900.
15,900. No,
Yes,
it
sir.
should be in million now.
15
Yeah, that's
million
what-
900,000.
Okay.
15.9, yes.
Okay. So next, what is the contribution per unit?
That's
What is
94.
94 naira per unit.
times we will
100.
produce 100 can be 100 naira.
100 units.
So what do we have here?
That's 94,000 units.
9,400,000.
9,400,000. So we have the fixed cost. So what is the fixed cost the costs that we calculate? What is our fixed cost? Fixed cost, fixed cost, fixed cost. So what is the fixed cost? The fixed cost is 6 million. Is that not so? Because we need to pick the total. 6 million and 4 million, right?
4 million.
6 million and 4 million. 6 million and 4 million. Don't forget that fixed cost does not vary according to what they plan. No. It is based on budgeted. 6 million and 4 million. So what will be our profits?
For biggies, we'll have 9,900,000.
For biggies, 9 million
900,000.
900,000.
For
What do we
small,
have here?
we'll have 5,400,000.
5,400,000. Right. So this will be our profits. This will be our profits. Okay. This will be our profits. So we are done with the C part of this question. So if you have question, you can unmute your mic before we move to shadow price quickly. I don't think you should have question though, because it is still what we've been doing under limiting factor. So if you have question, that means you've not been going through the recording and all that. If you have question based on this C part, that means you've not been going back to the lecture. Yes. Blessing. And I may not answer.
Thank you. Good afternoon, sir. Please, I just wanted to ask, why are we ranking smallies first?
You have which one? You have 47 naira per hour. You have 26 naira, 26.5. Which one comes first? Which one is higher? If you are the cost accountant, then you see that this person will give you more than this. Will you rank biggest first? Yeah.
Okay, thank you, sir. I understand.
You're welcome. So we need to move, right? This is 341. 341. You can unmute your mic.
Okay, sir. So my question is that this step, like the calculation down to the workings, What if in exam hall we now miss one step or
Our there is no how
sir?
you want to calculate. You want to do output. The question says we should do output too. Is the output that take us to where we need to confirm which one is the limiting factor. We need to there's no how you will calculate the output without identifying which of these products, which of the available resources is the limiting factor. You can't do allocation without calculating contribution per limiting factor. You have to rank. You can't do all these things. Or how do you want to arrive at your answer? No, how do you want to arrive at your answer? So you have to do the step, right? The steps are very simple, right?
Yes, sir.
Okay, thank you. Okay, next question. Next question is, we should comment, explain the meaning of shadow price, and comment on usefulness of it. So what is the usefulness of shadow price? What is the usefulness of shadow price? What is the usefulness of shadow price?
It helps in decision making.
Okay. Oh. What is the usefulness of shadow price?
It
That will
helps
be our
to
assignment. That will be our assignment.
additional.
Usefulness and limitation of shadow price. Because from the definition of shadow price, you should be able to say, oh, this is what they use shadow price for. Even if even if you don't know what to write, from the meaning of shadow price, you can at least come up with two usefulness from the meaning of shadow price.
So one of the usefulness is that it increases the contribution of a company in your organization.
Okay. Now the usefulness of it can be used for setting transfer pricing, or it can also be used to determine the relevant cost of scarce resources. Right? It can be used to set transfer pricing. You want to know the price, the shadow price. You can also you can use it to determine the costs of scarce resources or additional resources. When you increase a scarce resources by 1, what is the cost? Although it will give you a shadow price of either 1 naira or 2 naira, fine, but it will increase the cost of the scarce resources, right? What is the limitation? Limitation of shadow price. What are the limitations of shadow price?
It
Right.
increases the cost incurred.
Okay, that would be our assignment. Yes. So let's quickly move to the calculation. Calculate the shadow prices of the constraints. This is another focus. Please, when desirable is not available, the available becomes the desirable. Meaning that even if they ask you definition or list something, maybe you don't even know what to write. God forbid. Just look for the meaning of that thing. Like now, shadow price, look for the meaning. Then from that meaning, just think, write something. Just keep writing, write something. Oh, usefulness, advantage, usefulness. Just keep writing. That, okay, from this definition, I think we can have this as this. Anything that comes to your mind. And when the desirable is not available, that is why I don't encourage cramming. Understand, once you understand something, you can, but in some cases, you just have to do it. Right? In some cases, you just have to cram some things. You just have to. But then you need to understand some parts. Right? Like the usefulness to the shadow, just trace it to the shadow price, the definition. Now, our focus is on shadow price. Class. What is shadow price of the constraints? When you increase, is it D or Roman figure? Is it D, C, D, right? Is it the D part of the question?
D.
Okay. Roman figure 2. Now, shadow price. When you increase a scarce resources by 1, it will lead to an increase in the contribution. With that, your scarce resources, it will increase your cost. And that is why, oh, if you increase it, what will happen? It will increase your cost. It will increase your contribution as well. Now, from this allocation now, smallies, we can give everything to smallies. But we can't allocate everything for biggies because there is a constraint. Although the machine time is the scarce resource, because there is a constraint in the product or in the production of that particular product. We don't have that enough resources. That is where you will now place your shadow price, where you don't have enough resources to produce that product or that unit. So therefore, we will need to increase the biggies available for biggies. We need to increase it by 1. Then we will now say what will be our contribution. Now let's quickly do that. Let me copy this. Only for biggies. We should not forget that our constraint is only on biggies. We don't have that capacity to produce everything, right? So we can come here, allocation. Now, class, let me cancel this. Okay. Now, if you, in this case now, we have to come here and adjust. We have to adjust. This is what we have. Now, since we don't have that enough resources to produce the whole unit that we want in biggies, now, therefore, we need to increase that our scarce resources by 1. So therefore, what you will now allocate to biggies will now be 600, 6001. You add 1 to it. So we can have, you add 1 to it. So therefore, how many units can you use this to produce? Divided by the hours per unit of biggies, divided by, that is the shadow price. You increase it by 1. So it's 4 hours per unit, right, class?
Yes, sir.
4 hours per unit. Right. So when you divide it, what do you have?
15
15
0.5.
002
That's 150 thousand point two
150.
five. 1,000.25.
I'm confused.
Sorry,
Uh
150,000.25.
um Rejoice, what do we have? 150,000.25, right?
Yes, sir.
Yes, sir.
Yes.
Okay, that's fine. As a result of increasing that scarce resources by 1, where you have a scarce resources, you don't have enough capacity to produce that unit, is on biggies. And that is the reason why we increased it by 1. Now, for biggies we can have 0.25. We can have 0.25 coming. Okay, 0.25. Then what will be the resulting contribution as a result of this? What will be the new contribution? Contribution. Oh, okay. Let me just do it like this. Oh no. Okay. Biggies, smallies. We have the nearer sign, right? Now, what is the contribution per unit for biggies? The contribution per unit for biggies. What is the contribution per unit?
106. 106.
106
106.
for biggie.
106
For
times
biggie.
106 times 150 0.25 units. What will be the resulting contribution for biggies? What do we
15,
have?
15,900,000.0265.
0.0 point what?
0265.
0265. 0265. Is this correct?
No, sir. It's 15,900,000 27 naira.
27 naira.
You
Zero to
approximate now.
7.
Are we supposed to approximate directly?
It's already
Approximately.
converting to naira now. So
Multiply. When you multiply, what do you have? If you multiply this, what do you have?
we have 15,900,000
Zero.
26 naira point 5 kobo.
Okay, you have 0.5 kobo. Okay, that's fine. 0.5 kobo. Then you now approximate it, right?
Yes, sir.
That's fine. That's fine. So the resulting contribution for smallies will remain the same because we don't have the scarce resources there. We have that capacity to produce the 100 units, right? So what is the contribution per unit? What is the contribution per unit? What is the contribution per
94,
unit?
94 naira.
94 naira.
94 naira times 100 units times 100 units. What do we have?
9.4.
We have 9.4.
9,400,000.
Thank you. This will be the resulting contribution, right? Now, shadow price. You will now say your old contribution without shadow price, old contribution minus, or you say new contribution minus the old contribution. we give you what we call the shadow price. So therefore, I can have here the total. What is the total of my contribution? What is the total? Add this together. What do you have? Or since I only increase biggies, I can decide to say, oh, I only increase biggies, right? So this will still remain the same, right? So I can just say smallest will still remain the same because I only increase biggies. Now, I can come here and I'll say the new contribution for biggies. What is the new contribution for biggies? 15,900,027 minus what is the old contribution of biggies? 15 million, right? 15,900,000. 15 million. 15,900,000. So what is the difference? So the difference is what we call the shadow price. What is the difference, class?
27 naira.
What do we have?
27
27
naira.
naira.
27 naira. This is what we call shadow price. So you can use it to set a transfer price. It is part of the usefulness. Can you see? You just need to increase your scarce resources by 1. If you increase it by 1, what would be the additional contribution? The additional contribution is what we call shadow price. Question? Question? You can unmute your mic.
Okay, so I said something about setting the transfer price. Is it that this shadow price is just for within the company when they are transferring to another division?
Yes.
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 Okay.
Yes, we'll get there. We'll get there. So I think I'm the one that will take that part of transfer pricing, right? Yes, we'll get there. Transfer pricing. Okay. So any other question? So always increase the scarce resources by 1. When you increase it by 1, that additional increase is what we call a shadow price in contribution. Please take notes. We have dual price or shadow price under the theory of limiting, under the theory of linear programming. We'll get there. So we need to move. So what is the next requirement? Quick one. We have, I think, E, right? The next question, please. Next question.
Hello, sir.
Are we?
So are we supposed to ignore the small list now that is not having any constraint?
So what did you, Mr. Moses?
Oh,
Where
yes,
did you increase the 1? Where did
I know
you
it's on.
increase the 1?
I know it's on.
And so we don't need that one. Yes, we don't
Okay.
need smallies because it is not our problem at all. Where we are having constraints, challenges that we don't have that capacity to produce everything. So you can, anyhow that you want to do it, shadow price is shadow price. If you still add smallies, you still have 27, you still have 27 naira. So whichever way.
Thank you, sir.
Right? Nobody will penalize you even if you didn't add it. So it's 27 naira that we want to get at the end of the period. So it's 27 naira. So thank you. Any other question? Yeah, good. Okay. We need to move. Right. We need to move further to what is the next requirement? Okay, E, assuming the company position C, assuming the company position in C, what happened in C? Okay, we determine the profit in C, okay, is maintained for the 3-year within an investment cost of 45 million. Don't forget that this is capital investment. This will take us to investment appraisal. This is your initial outlay. Then they give us the cost of capital of 15%. Now, and they say we should refer to C. What do we do in C? We calculate the resulting profits. Class, we calculate the resulting profits. Now, if we calculate the resulting profits, what is relevant cost here? Fixed cost is not a relevant cost under the investment appraiser. So therefore, when we want to calculate whether the project is viable or not, we will not include the fixed costs. Can this venture be justified for the period? Yes or no? The T is if the project gives you a positive MPV, right? We will not include fixed costs in our computation because fixed costs, it is not a relevant cost. But the question now is, the project is for how many years? Is it for 1 year? Is it for 2 years? Is it for 3 years? We don't know. So we need to check if from the question, if we have something like that. So the project will last for how many years? Oh, on his return after 3 days of the program, he called for a management meeting to discuss his experience at the seminar in view of the board decision, producing two after 3 days. I need to check. It is expected that in the forthcoming year, okay, so what will now be the numbers of years? Interesting. What will be the numbers of years, class?
1 year.
3 years. 3 years.
So how did you arrive at your 3 years?
2 years. 2 years.
How did you arrive at 2 years?
Because we are calculating for the 4th year.
How did you we are calculating for the 4th year?
Yes.
Where did you arrive? How did you arrive at 4th year? Where did you get that information?
It is expected that in the forthcoming, that means that one is let's say we are project in the forthcoming. I think that we are going to calculate for 3 years. That's my own assumption, sir.
Okay, that's fine. Esther.
Yeah, so I want to say that we'll add the 4th year to the current year of that we are accounting for.
Okay.
I think is the forthcoming year is with the current year we are working on, making 2 years.
Yeah. Yes.
Okay, that is 2 years.
Yes, sir.
Okay. The current year and the forthcoming year, that is 2 years, right?
Yes, sir.
Please, did we agree with that? Interesting. Makes sense.
Yes.
Okay. Okay, that makes sense. You can see. I was thinking of, but that's fine. That makes sense, right? So therefore, what we didn't see, we will not include fees cost in our computation because fees cost is not a relevant cost. So therefore, the initial cost of the investment, what is the initial cost of the investment given to us in this question?
45 million.
45 million. Please add the total contribution for biggies and smallies. Total contribution of biggies and smallies. We give what? Total contribution. Add these two contributions together. Right. Add the two contributions together. What do we have? When you add the total contribution,
You have
We are
25
having a 25,300,000.
25.3.
25 million
300,000.
300,000. The numbers of years is equals to 2 years. Now, if you want to determine a factor, we need to use annuity, right? We need to just use annuity instead of doing 1 year 2, okay? Or let's do it this way, don't worry. Contribution. It is a cumulative now. It's still the same thing. Let's just use okay. Let's use this formula. Let's use annuity. Let's just use annuity and move on, please. So we need to calculate the discount. Don't forget that we have the costs of capital. What is the cost of capital given to us?
15%.
15%.
15%. So we need to, in this 15%, we need to determine that will be our DCF. Is that also the discount factor? But it is for 2 years. We need to determine a discount factor for 2 years using annuity formula because it is 2 years cumulative. Discounted factor using annuity. And what is the annuity formula? 1 minus 1 plus R. This question is loaded, right? Raised to power of
Minus n.
Minus n.
Divided by r.
Divided by r. We give us our DCF for 2 years using the annuity factor, annuity formula, right? A minute. Okay, we're almost done, right? We're almost done. If time permits us, we should introduce throughput accounting. Okay. Now, our R, this is our R is 15%. You can copy this and that is 15%, 0.15, 0.15. The numbers of years is 2 years, right? It's 2 years. So what is the annuity factor from year 1 to year 2? What do we have? What do we have? Am I the only one in this class?
No.
Yes, sir.
Okay, that's fine. So what do we have? You can check at the back of your question paper. You will see annuity.
1.6257.
I'm coming if I can see a question here where at the back of your answer booklet or at the back of your question paper, you will see okay, let's just move on. Right. So you will see annuity table. What do we have?
1.6257.
1.6257. So therefore, your initial investment equals to the 45 million. Your contribution is 20. Okay. It's like this. This will be at year 0. So this will give us the present value of this at year 0. Right. Then the contribution. Oh, okay. I use this now. Contribution is what? To what? 25,300. Then you have your DCF. What is our DCF? 1 point what? 1.625.
6257.
1.57.
So what will be the present value? What will be the present value when you multiply? What will be the present value? What will be the present value? Excuse me.
We'll be having 41,130,210.
Okay.
130.
41, right?
Yes, 41 million. 130,210.
130,210.
Yes.
Please understand the process. It's only important to understand the process, please. Net present value is equals to, you have to remove your initial outlay, your initial investments.
3,869,000 0.970.
Positive, right?
Yes, sir.
Remove what you have in your present value of initial investment minus the present value of the contribution. You have MPV to be positive. So what is the difference?
3 million
3
869
million
869
869
790.
790.
Yes, sir.
It's positive. So
Yes, sir.
therefore, it should be accepted. Class, please confirm if you understand the process before we move to the next question. This is Roma figure 1 of E, right? Roma figure 1.
Sorry,
Let's
please. I have a question.
So what is the question?
Please, that's DCF. How did they come about the 41 million, please?
41 million. How
Yeah, for the
did
present
you
value.
attend? Did you attend FM class?
Not all the time.
This is the annuity. This is initial investment at year 0. So you have 45 million negative, right? Then your contribution, your DCF is based on annuity, 1.6257 times 25,300,000 of the total contribution. You have a present value of 41,410,000. So what is the difference between this?
132.10, not 201. It's 210.
41,132,000.
210, 210, not 201.
That's the only error, but every other thing correct.
41 million, one what?
130, 210. 210.
41,130,210.
Yes. So to get your NPV, this is your present value of the contribution minus your present value of the initial investment.
Then the answer should be negative now, right?
Okay, is it negative? No, that should
Yes.
be negative. That should be negative. That means it should not be accepted because we have a negative. However, you just need to understand the process. I can say attempt. Is that not so? Any other question?
Okay, sir, since attempt, that means if you are solving it, you will not complete it. We have attempted it. Then we move to the next question. Because if you want to solve all this one finish, before we now move to the next question,
Yeah,
I'm already.
the strategy is because we are doing it in class together, right? It's because we are doing it in class together. This is a compulsory question, 40 marks. You don't need to start with the compulsory question. Start with the list of questions you know you can do within 20 minutes. Then you come back. When you are done with that, you now come back to the first question. Then you pick all your variables one after the other. So anywhere you stop, you can submit. But just make sure you attempt it. The question 1 is very important. Anyhow that you want to do it, make sure you do what? You attempt the question 1. Right. Right. So, any other question, please? Any other question, please? So, can we move? Please, what is the next question? Hello, what is the next question? Oh, so you're not with the question. Okay. Oh.
The
What
next
is the next
question is, what is the break-even discount factor for the project?
class? Should I tell you the truth? We can calculate the break-even discounted for this project if the project is negative.
Not viable. Yes.
Because when you want to determine break-even discounted factor, you use internal rate of return. And the internal rate of return is when you will now say the positive NPV and the negative NPV. Is that not so? So we can use it. So we can use it. So definitely, maybe it's not supposed to be 2 years, because I'm still trying to figure out. Interesting. But just understand the process.
But
Please.
assuming this way, sir, and the question is here like that, are we not supposed to just answer that, just like giving the note on it that?
Yes, you can give the note. Yes, you can actually give the note.
Say it's not viable.
Yes, you can give the notes now. Shebu will say the project will not be viable for the Roma figure 1. The Roma figure 2, you can say you cannot be, you can't, since the project cannot be viable, so therefore the break-even